Stacy Rasgon. Stacy, tariff risk in semiconductors. How do you look at it after these new the China back and forth?
Yeah, you bet. So semiconductors actually have very little direct risk from tariffs, at least on these countries, which are China, and then I guess we'll find out at some point Mexico and Canada. The U.S. imports a fair amount. I think in 23, the U.S. imported about $73 billion of total semiconductors. Less than $10 billion came from those three countries combined now, out of a $600 billion plus total industry. It's relatively small. So the direct impacts are pretty minimal. There are potential indirect impacts, though, because most semiconductors travel into the U.S. inside other things. And so there can be secondary effects, like if there's demand destruction because the prices of the end products that contain the semiconductors go up, and does that impact demand? And just for an example, China is a pretty sizable importer to the U.S. of things like handsets and compute PCs and servers. Mexico is as well as vehicles and cars. A lot come from Mexico, and Canada. We import a lot of vehicles from Canada as well. So
is it enough to change your view on any of these?
But not directly. What's that?
Does it change your view on any of these? Change numbers?
No.
Change demand? No.
No. To be fair, we've been looking at tariffs on and off for years. I think I did my first tariff note in 2019. I think I've done 6 or 7 of them since then. There are very little direct impacts, unless there are universal tariffs, which clearly could have an impact. But universal tariffs will have an impact on everything, not just semiconductors. So no, I'm not too worried about tariffs, at least not from a direct point of view.
Okay. What about AMD? Stock is up 4% into this report. There was kind of a rethink on these semis, especially tied to the AI stories from DeepSeek. Where are we on that, and what do you expect today?
Yeah, so AMD does report in just a little bit. I think the stock's probably up because I think expectations have come down. You can go look at the share price. It's been under a lot of pressure for a while. And I think investors, everybody's worried about, what is the AI number going to be next year? Are the AI revenues going to decline in Q1 potentially? They were talking about lumpiness last quarter, and I think there's a belief maybe that expectations are now finally low enough where people can maybe take a flyer on it. So I suspect that's why it's up. I think it's just positioning into the print.
Why has it underperformed so much?
I'm sorry, what was that?
Why has it underperformed so much?
Well, you have to remember, you go back 6 or 9 months ago and people thought, they were guiding at that point for $2 billion in AI revenues, and they'll wind up doing 5 or so. But at that point, people thought they were going to do 10 plus. And so expectations just got way out over their skis. And they moderated and came back down to reality, as we went through the year. And that's kind of where we are right now. Personally, I still worry that numbers overall next year could be a little too high. We are below. I'd like to see, again, the sell side AI numbers come down again. I think the buy side, the investors who are investing in the stock, their expectations have now come down for next year. And again, people are looking at what this might be into Q1. I suspect numbers need to come down. That's what the stock price is reflecting. Numbers were too high. And I think there's a belief going into it maybe tonight that maybe if expectations are low enough, you can take a flyer on it. And at least the valuation is a little more palatable. It was, I don't know, as if yesterday it was something like 25 times forward earnings. It was, 40 or 45 times if you go back, like I said, 2 or 3 quarters. So It's moderated.
So it's still 150 price target for you on that. What about Nvidia, 175, which is having a little rebound today, but hasn't really come back from last week? Has the narrative changed?
Well, I don't. Personally, I think I said this earlier on CNBC a while back. I think the whole DeepSeek thing, the fears are very much overblown. But that being said, there's an overhang, and you can't prove a negative, right? You can't prove that it won't be an issue. And if people are now worried that it could be an issue, that just may take a little bit of time to clear. And you can sort of fold that on top of some of the supply chain issues that they've been having. They're ramping up their new platforms, and these are very, very complicated things. And they're just, they're going to sell every single one that they can get out the door. The question is, how many of them can they get out the door? And so there's some incremental nervousness just around them getting supply chain in order as you go through the year. And couple that with this broader uncertainty around AI and DeepSeek and everything else, it's creating a bit of an overhang on it. I think it was overdone. But
Nvidia closed at 118.65 in the most recent market close, up plus 1.71% from the day before. The stock outperformed the 0.72% daily increase of the S&P 500. The tech-heavy index, the Nasdaq, increased 1.35%, while the Dow gained 0.3%. Shares of the company that makes AI and gaming graphics chips have dropped 21.93% during the previous month as of today. The S&P 500 gained 1.02% during that period, while the computer and technology sector dropped 1.35%. Investors and analysts will be closely monitoring Nvidia's performance in its next earnings report. On February 26, 2025, the corporation is scheduled to release its results report to the public. It is anticipated that the company will report an EPS of $0.84, which would represent a 61.54% increase over the same quarter last year. Additionally, according to our most current average estimate, sales is expected to reach $37.72 billion, which represents a 70.68% increase over the past quarter. Additionally, investors should keep an eye out for any recent changes in analyst expectations for Nvidia. The way that short-term business trends are changing is often reflected in these recent modifications. Positive improvements in forecasts so reflect analysts' positive assessment of the company's profitability and business health. We find a direct correlation between these estimate changes and short-term stock prices. To make use of this, we developed a proprietary model called Rank, which incorporates these estimate changes and offers a useful ranking system. With number 1 stocks delivering an average yearly return of plus 25% since 1988, the rank system, which runs from number 1, strong buy, to number 5, strong sell, has an impressive track record of superior performance that has been independently audited. The consensus EPS estimate has increased by 1.12% in the last month. At the moment, Nvidia has a space rank of number 2, buy. When it comes to valuation, Nvidia's forward PE ratio is at 27.73. Compared to the forward PE average of 26.47 for its industry, this valuation represents a premium. It's also important to note that Nvidia's PEG ratio right now is 1.39. The PEG ratio is comparable to the commonly used PE ratio in that it takes the company's anticipated earnings growth into consideration. The average PEG ratio for the semiconductor general industry was 1.37 as of yesterday's closing end. The computer and technology sector includes the semiconductor general industry. With an industry rank of 208, this sector is now in the lowest 18% of all 250-plus sectors. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Tell me about Microsoft. You did mention Nvidia and Microsoft at the top as two clear leaders. Are Nvidia and Microsoft still leaders in your mind? You would buy them today?
Oh, yeah. I think Nvidia is a table pounder here, despite, obviously the sell-off. 15-to-1 continues to be demand to supply in terms of Nvidia chips. We'll have the tariff and other issues, DeepSeek, but that continues to be what I view as one of the core AI plays. Nothing has changed in my view. And I think with Microsoft, right now, sentiment's negative, but it was a capacity issue. The actual AI business on a $13 billion run rate, more and more, this is going to become an AI story. And I think this is just really what I'll call just a pause in what's going to be just a massive growth cycle for Microsoft that the street is underestimating.
Yeah, Google's at highs. We have Google and AMD after the bell. A fan of both of those?
Yeah, get that pop. Maybe if there's some popcorn there, get that popcorn ready for Google. I think it's going to be a robust number in terms of Google Cloud. I think our advertising checks are stronger than expected. And that's one that could have $40, $50 upside here. AMD is still a work in progress, but positive on that in terms of the broader story. But obviously, Lisa Su, they need to start to show some traction in terms of some of the AI initiatives.
So you're not seeing the same kind of upside potential for AMD tonight, but you said $40 to $50 for
Google.
Alphabet. Yeah, that could be a big mover tomorrow. If I had 10 grand, I tried to make it reasonable, right? 10 grand, what should I do with it today?
I think you own Palantir, Tesla, Apple, and Nvidia. And I think that continues to sort of be over the next 3 to 6 months to play.
The stock of Nvidia, which recently joined the Dow Jones Industrial Average, saw the strongest performance last year, rising 171%. The titan of artificial intelligence, AI chips, had an amazing year. It prepared the launching of its new revolutionary Blackwell architecture, announced record income, and entered this renowned benchmark. However, Nvidia's momentum has sputtered to a halt in recent days, as the stock has down almost 15% during the last 5 trading sessions. What caused the drop? The AI model was taught for a fraction of the money that large U.S. tech corporations have been spending, according to a Chinese startup called DeepSeek. The theory is that these Nvidia clients may have been overspending and may change their investment and strategy in response to the DeepSeek announcement. You might be asking if you should purchase Nvidia stock before February 26th in order to take advantage of both short-term and long-term gains, since the company is on its way to its next major catalyst. Here is what the mounting evidence indicates. Let's start by briefly reviewing Nvidia's meteoric ascent to prominence in the AI industry. Once a leading supplier of graphics processing units, GPUs, to the video game industry, the company developed the CUDA parallel computing platform to assist realize the potential of the GPU in other industries. Even while Nvidia still caters to the video game industry, artificial intelligence is now the company's main focus. 87% of its current revenue comes from its data center operation, and revenue has hit all-time highs, increasing by double or triple digits every quarter. This is because of the company's whole ecosystem of AI goods and services, from networking options to software, in addition to the GPUs that enable the critical processes of model training and inferencing. As investors tried to get in on this fast-growing company that has been dominating a rapidly expanding market, all of this has helped boost Nvidia's stock performance. Let's now examine the catalyst that will soon occur. On February 26th, Nvidia is scheduled to release its fiscal fourth quarter and full year 2025 financial results. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
The S&P 500 sitting right around 59.93. Tell us what's on your radar this morning for the S&P.
Well, Caroline, that's exactly the 50-day moving average, 59.93.66 here. So what we want to do is be able to defend that moving average. The 20-day is pretty much sitting at the same level here. We want to obviously get a little bit of a rally going here, some follow through with that day yesterday. We actually had a very interesting candle, to say the least here. But when you're kind of looking at the structure, we are starting to see a little bit of a pullback or another wave that's kind of taking place. We had this breakout to the upside of this channel line. We had that breakout basically back around January 17th, hit new all-time highs, and now we're having a new cycle type of wave pattern that's taking place. We've already had one wave to the downside, a counter trend that hit the resistance area, that purple line, coming back down, kind of testing that previous channel that we've been highlighting around 59.30, and then now what we want to do is really try to bounce right back off, try to get to around 60.60. That would actually be very ideal for us to actually hold this trend, and then once again having some follow through over the next couple of days to try to break out, get above 6100 and start making new all-time highs here again. The MACD is once again the only thing that's a little bit concerning. If you're looking at it right now, it has officially crossed this morning. If you're looking at the E-mini S&P futures, it has done the same, and we are seeing breadth kind of weaken here a little bit. So that MACD cross is actually a bear signal right now. We'll just have to keep our eye out on it. Obviously, that can change. It's a moving average. It's two exponential moving averages being compared right now. And if we actually have a very strong day today over the next couple of days, it might be able to kind of counteract that cross here. So I still say the bulls definitely have it in their favor for now, but we'll see, especially when the headlines kind of hit the wire here today, like it did yesterday, how the market's going to be able to react, especially when it comes to the China tariffs.
Okay, so Kevin, really a continuation of what you were talking, aside from MACD, just strong, still bullish technicals. What would change your mind, other than obviously, seeing a huge sell-off, but what specifically would change your mind and make those technicals a little less positive?
Yeah, if we have a fundamental breakdown below 5,900 or even 5,917 to be exact, and we close below that level, that's where you get a little bit concerned that we do have maybe some more sellers in the market rather than buyers in the market. But if you're looking at it on an intraday basis, as we have it up here, what I'm kind of looking for right now is that 6,000 level as that intermediate area of support here for the market, and then 60.60 to the upside. To the downside, 59.50 if we do get any type of formal break. And once again, I mean, it's all going to be depending dependent on volatility and how the volatility skew is going to react here today. We have the JOLTS number that are coming out today. We have jobs week. So there's a lot on the calendar that could actually create a little bit more volatility. But once again, break below 5,900 or close below that level on very large volume would be that area of concern for the market. And Caroline, what we've seen a lot of resiliency, right? And we always have to highlight that. But the problem is for the bears is that you have one news item that kind of knocks the market down, but you really don't have anything else to really kind of follow that up. If you wanted to have a sustained breakdown of the market, you need to have 2 or 3 or even 4 news items or narratives taking place that's going to be bearish. We just don't have that right now. I mean, we really kind of focus on one news item a day. It's DeepSeek on Monday of last week. It was tariff policy yesterday. We were able to counteract that. So bears really need not only just from a technical standpoint a breakdown below 5,900, but you also need the narrative to kind of spook the markets or get these sellers out. We just don't have that right now.
Yeah.
Nvidia, a leader in artificial intelligence, AI, had a successful 2024. As it introduced new products during the year, experts argued over how much its data center revenue could increase. Customers of hyperscalers continued to increase their capital expenditures in order to expand the compute capability of their data centers. However, things took a drastic change in January 2025, when DeepSeek, a Chinese hedge fund, revealed the resources required to perform AI effectively. Some investors were more concerned with how to invest in DeepSeek and its claims that it produced a high-performing large language model, LLM, with just $6 million in financing than they were with the performance of Nvidia's most recent AI hardware sales. The announcement caused Nvidia's shares to drop 11% so far in 2025. However, there are still doubts over DeepSeek and its assertions, so investors would be wise to pay close attention to what Nvidia says in its upcoming earnings release, which is scheduled for February 26. All eyes were on Nvidia's record-breaking sales growth, particularly in its data center division, prior to the DeepSeek announcement. However, Nvidia's share price had already skyrocketed as those sales surged, and the unsustainable rate of growth was slowing. The quarterly increase in Nvidia's data center revenue should swiftly reverse if investments in generative AI infrastructure abruptly stop, as some have speculated based on the DeepSeek report. In the most recent quarter, it seemed to start stabilizing at a growth rate in the mid-teens, as can be seen here. I'll keep an eye on that figure to see if Nvidia's stock price can recover its recent losses and more, at least in the near future. Additionally, Nvidia has other long-term goals in mind. The next area to keep an eye on is the company's auto and robotics division. Although that income is insignificant compared to the data center, it has the potential to be Nvidia's next significant growth driver. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.